Okay, so with that 15-minute candle close, we're now getting closer to the 8:30 news. So I want to break down this GBP JPY trade that I'm in. First thing I want to say, we have this high impact news coming in this morning. Now, it's not the most impactful news event when we compare, NFP, GDP statements, bank rate statements. It's not one of those major events, but if you look at Forex Factory, you'll see core retail sales today is due out at 8:30, and that is a high impact news event. So it can shake up the whole market. You never know. Think back to last week. We saw GBP NZD move down like 100 pips in 15 minutes, maybe like 80 pips in 15 minutes. That happened on US dollar news. So you never know which pairs are going to get shaken up by US dollar news, and that's because the US dollar is like 80%, 85% of the entire currency market. So if there's big news for the dollar, you can expect most pairs to be volatile when that news comes out to some extent. But first, now that we understand the news, let's go into this GBP JPY trade. So first, I'll show you the P&L so far. I have half the trade closed as of filming this right now. The entry at 150.86, my exit at 150.65. So we're short, looking for this to come down. Now, I've actually been tweeting about this all morning as well because the setup is pretty clear. And when we go through the rest of the watch list here on the right side, you're going to see why I favored this one over Euro JPY, why I favored this one over Euro GBP. This was the one that I wanted to try to find an entry on this morning, and it actually presented for us. Now, one more thing before we get into the analysis here. If you remember from yesterday's live stream, Euro CAD was something that I really wanted to trade. The setup was really solid, similar to today on GJ, but we didn't get the entry signal. So we had a clear bias and we did not get the entry signal. If you look at Euro CAD from yesterday where we were looking at it, this is an overnight markup, we were looking at buying it back here off the 50, and it made a really nice move yesterday, sat sideways there, and then again overnight, another move to the upside. So if we had just bought it yesterday at any random point, would have made 82 pips, would have been a nice trade, but we don't trade that way. That's not trading, that's gambling, because if you don't have your trigger signal, if you just have a bias, like how I was long biased on EuroCAD, just having a bias is not enough to be building a trading business around. You're going to feel your way around the market with that bias, and you're not going to find consistency in your results. Once we have a bias, we then want to identify trigger signals. That's the big thing. Now, we did not get the trigger signal yesterday on EuroCAD. Instead, we got one overnight here. We'll talk about that in a little bit. But to go back to GJ so we can stay focused on this trade, the trigger signal presented this morning. And again, this is almost like an inverted setup of EuroCAD. So when I said at the beginning of the stream, the optimism and the gratefulness, the gratitude carried forward into today, it's almost like the market rewarded my patience yesterday by giving me a good setup here this morning. Now, this is not an A1 entry. You guys know at ASFX we teach the A1, the D1, and the D2. The A1 and the D1 are going to be your in-trend trades. A1s are going to come off the red 21 EMA or the blue 50 EMA. You're not going to need to use the 1 minute for those trades. They're 15-minute candle breakouts. That's what we've backtested. The D1 is going to use the 1 minute, and it's going to come off either the 21 or the 50 EMA. But the first thing we have to acknowledge here with this setup, as you can see, in my notes, I wrote this is a D1 off the 21 EMA, which is not my favorite D1, but the 1 minute sets up the risk point and the structure and the trigger signal, right? We don't just have a bias here. We got our trigger signal on the 1 minute because we were able to identify risk reward. So what we're looking at here, if you want to just zoom out with me for a second, you can see from yesterday, the low here at 9:45 in the morning, that sets the box, so to speak, to give us our support zone. That support zone is broken overnight and then retested here as we move into the New York session. This is like 4 o'clock New York time. So what happens when support is broken and retested? Who knows? It becomes resistance. Support is broken, and now it's resistance for the trend to continue to the downside. Look at the trend in this pair since Friday. This is Thursday, Friday, Monday, and then Tuesday over here. It's very clearly in a downtrend, very clearly short biased across multiple time frames. So you should not be trying to buy it, especially because it's below the 50 EMA. If this was above the 50 EMA, you could look for longs. But because we're below the 50, and of course, it really, really helps that we're below yesterday's low and we've now broken that zone, that really tells me that this has more momentum to move lower. Price structure tells me we can move lower since we're under yesterday's low. The EMAs tell me we're in a downtrend, and all of that is confirmed by the perfect market sentiment line in the sell zone. One thing that someone asked about the chart, they said, is the RSI being oversold right here a turnoff? I said no. Just because it's oversold, don't think it has to reverse. You will find way more trade setups that hit oversold and keep moving lower, or hit overbought and keep moving higher. So don't let overbought or oversold on an RSI make you think that it has to reverse. Instead, I see that it's shifted down here in the Asian session last night with the 8 EMA crossing back under the red 21 EMA. So that feeds that same short bias. Here, as we moved from the Asian session into the London session, it tried to shift back up, tried to get above the 50, but it couldn't. So that's a lot of selling pressure shown there. Then we broke that zone. And then even here in the retest, it does not shift back up. The 8 EMA holds under the 21 EMA, which says more likely than not, we're going to keep moving lower today. So once I woke up at about 5 o'clock, did my meditation, did what I needed to do, got my coffee, we get to the desk. I'm looking here as it's coming off the 8 EMA, and I know that I can't trade that as an A1 entry. But I also know that with the D1 entry, I can look for entries there. So that's where I pull up the 1 minute. We're going to open up the 1 minute now. And I was able to find this divergence setup. So you can see from 3:30 into 4 o'clock, if I blow up the RSI is falling. The price action there is rising. That's divergence. You start at the RSI high, match it to the price action high, and then draw your lines. That's what we teach in the divergence course, how to identify this. That gives us the top. If it breaks above the top, we call it, that means it's rising and we don't want to look for shorts. But what did it do instead? All before I got to the chart, it was making lower highs, lower highs, lower highs. So when I got to the desk, I see it holding the 50 EMA here. I see the market sentiment line in the sell zone. So I know if it does want to come up and either do one of two things, I won't want it. The two things it would do would be pulling the market sentiment line into the buy zone, the yellow line into the buy zone. That would be a sign that it's going to rise. Or if price action was to rise and break past these previous lower highs and head up towards this divergence high. Now, if it got back above this divergence high, that would be a sign that we definitely would not look for shorts. But look, you've got 4 lower highs set in. So those two things told me, okay, if it does either one of those, it comes higher or it pulls the market sentiment line into the buy zone, I'm not going to want to sell it. But what did it do? It continued to make lower highs, as you can see, and it continued to hold the market sentiment line in the sell zone. Even up to this point, it's just peaked into the buy zone a few minutes ago, and as it started to rise here, you can see I closed a little bit of the trade right here, but still, it's making lower highs on price action. So I'm just following price structure and what the market sentiment line is doing. I'm reacting to that versus trying to forecast what it might do, where it might change. So that was how I went into finding the risk reward setup here on the 1 minute. Let me just erase those. And now you can see how that 1 minute trigger signal lines up with this 15-minute bias. Because at the point of taking the entry on the 1 minute here, we would just anticipate it to hold the 8 EMA. If it did not hold the 8 EMA on the 15-minute, that would either be pulling the market sentiment line on the 1 minute into the buy zone, or would be breaking this structure on the 1 minute to come up and make higher highs and higher lows. It didn't do either of those things. So again, look at what I did this morning. I reacted to the downtrend. I did not try to forecast it coming up or coming down or I just reacted to what price action was doing, following the bias from the higher time frame on the 15-minute, and waiting for the trigger signal on the 1 minute with predefined risk reward only because we have that divergence there. That's where I find my edge. Yesterday with EuroCAD, as I said already, we did not have 1 minute divergence, so I couldn't take the position if I wanted to stay on edge on that trade yesterday. Now today, you get the 1 minute divergence set up, you're in full trend, the higher time frames confirm the trend, you're just waiting for the trigger signal where you can find risk reward. And that's how I did it this morning. And like I showed you already, I'll show you the P&L one more time. My best exit so far is at 65. Right now, it's a little bit lower than that at 64. I'm staying in this trade at least until it gets down to low a day or until it breaks the 8 EMA. If it breaks the 8 EMA coming up, I'm going to take more of the trade off. When it gets to low a day here, I'm going to take more of the trade off as well. My stop loss is locked, as you can see with this black line, so I can't lose any money on it anyway. That's basically it. Let me see if we have any questions here in the live chat. I want to make sure that they get included in the clip because I'm going to clip this and put it on the channel. I don't understand why did you take GJ as a D1? It's not off the 50 and it's already reached max ADR. It's a good question, Mohammed. So you find the best D1s? Yes, off the 50 EMA, for sure. I traded this as a C setup. Because of that, number one, that it was not off the 50. Number two, it's oversold. That's the second knock. Number three, like you said, it's maxed out average daily range. But look at my risk reward, brother. It's 3.7 R to the low of day. So as long as it makes a move within its move already today, I'm still trading within the average daily range. I'm not trading it beyond the average daily range that it's already set today, if that makes sense. So I think that should answer that question. Nice, keep it simple, random with the trend. Sometimes I use overbought more of a knock than it should be. Overbought, oversold is not that serious of a knock, guys. I promise you. You don't have to trust me. Go do the markups. If you don't want to do the markups, then your job should just be to trust me because I'm doing more markups than most people. I'm coaching traders. I'm seeing more markups than most people. If you don't want to believe me, go do a bunch of markups and you'll prove it to yourself. I'm just trying to shortcut your learning curve. Would you say that the more lower, let me read this. Would you say that the more lower high, the most probable to trade? Yeah, lower highs will always feed that because that's going to be the trend that it's moving in, you know? Would you say that the more lower highs create, the more probable to trade is? Yeah, same question. Do you always wait for the 1 minute L50 to drop into the sell zone before entry? I noticed it broke the 50 a few times. So do I wait for the 1 minute L50 to drop into the sell zone? Yes, that's what we talk about, Quentin, in the D1 deep dive. Waiting for the market sentiment line to get in the zone that you are trading, in this case, short on the 1 minute, and then using the 50 EMA and the structure points to find the trigger as it comes through the 50, and then the structure points previous give it the stop loss. So when I took my position, let me move this, hold on. My position was like right here, right before 6 o'clock. Instead of using this as my stop loss, that would be defined as the most recent lower high, right? I go one more behind that. That's all. So I don't use this structure point because I kind of consider that all the same. I go one more behind it. Even to that extent, I'll even go to the top sometimes if I can still get good risk reward, if that makes sense. Let me pull this up because I think we actually finished exporting here. Just make sure this is finished. Yep. Let me close this, speed up the computer a little bit. No, it's not done. Okay. Give it another second. What's your view on GU? Do you like the analysis on my Instagram? Yep, I did like the analysis you sent on Instagram. Didn't know about targeting low a day when ADR is maxed. Yep, absolutely. So think about it like this with average daily range. Once we've already set that average daily range, we can still trade within it if there's good risk reward. But let's say this setup had presented much lower and then we didn't get good risk reward to that low a day, that would be something where I wouldn't even take the trade. If you can't get good risk reward, I'm not taking the trade. Now, here's an example. Euro JPY had some of you guys looking for shorts here, similar to GBP JPY as this 8 and 21 EMA cross down. Market sentiment is bearish here. So yes, you could be looking to trade this. The difference here, the risk reward is only 2R to the divergence line. There's bullish divergence here and it's maxed out its average daily range. Versus on GJ, there is no bullish divergence in the bottom. None. It's still very, very much so bearish. So that's why I favored GJ over EJ today. But EJ was on my watch list. I just don't want to trade like two knocks that I don't like are inside. It's like already maxed out its ADR, as you can see this has, and the bullish divergence. Because if this breaks the 50 EMA one more time, I bet you it's going up to the 200. Because then it would be a higher low off the bottom with the divergence. Yeah. Green and red colored charts seem to trigger something. I don't know what that means. How about EU? I see a perfect A1 trade. Go look at that. I'm thinking of switching from green to red just to black to focus on price. That's exactly why that's art. You definitely should do that. Everyone that sees my candles tries it. The people who do try it never go back to colored candles. They're just a distraction. Your advice, swing or scalp trading is better. It just depends on how much time you can be at the chart. For me, day trading is the way to do it. But that's everything on GJ and on Euro JPY, the difference between the two. Any questions on those two? We're going to keep going. I'll go to Euro USD. We'll go over everything now. Any questions on